Hey guys, Nabil Qureshi here. Welcome back to our new QLand property update. Hoping you're all well. We've got quite a few things to talk about today. 3 massive updates regarding what is shaping Brisbane and Brisbane properties market at the moment. Now, the first point is the new first home buyer scheme, which has been brought forth and starting on October the 1st. Second thing is the Reserve Bank's cash rate, which has dropped down to 3.6%, and what that interest rate drop means for you and the property market, and a full Brisbane property market update in regards to where prices are going, where rents are going by the end of this year. And then at the end, what I'll do is I'm going to try and tie in all these 3 things together so you know exactly what that means for you to be buying in Brisbane. So let's dive in. Now, as of October the 1st, 2025, the government is rolling out a new first home buyer scheme, changing it from what it was before. Okay, so here's what's changing. The cap was at $700,000. Now it's gone up to $1 million. So for a property up to $1 million, you can purchase with just 5% deposit. The other thing is you don't need to pay LMI, lender's mortgage insurance, which then saves purchasers thousands of dollars when purchasing a property. Single parents can purchase a property with only 2% deposit. And the biggest thing, I suppose, which was sort of stopping a lot of people getting into the market previously, is that the income cap for singles and for dual income earners has now been removed altogether. So all in all, what that means for Brisbane buyers, the biggest change, I suppose, being that the cap that was for $700,000 before, which was problematic for a lot of purchasers or buyers rather, who wanted to purchase a property, now that cap has gone up to, or the threshold has gone up to $1 million, significantly opening up the property purchase options for us here in Southeast Queensland. To add on to that, what the kind of suburbs that you're looking at, it opens up, if we were looking at the average or the median numbers, it opens up suburbs like Chermside, Carina, Mount Gravatt, Everton Park, and then if you wanted to go with sort of more value or newer type of properties, it's opening up areas like Logan, Ipswich, Moreton Bay region, where we have a lot of new suburbs coming up. Now, the benefits here are very clear. Your upfront costs are lower, access to the market is there all of a sudden, it's opened up a lot of access, and location. I mean, you can choose your locations. You've got vast options to choose from. But there's a catch. The experts are talking about, and this has happened historically as well, there's a huge demand now that's going to come into the gap of that $700,000 to $1 million mark, $700,000 to $1 million mark. This has happened in the past where properties that were lower priced, when they had increased the threshold up to the, for example, the first homeowner grant threshold, when it was increased and it went up to $750,000, or when the grant itself was increased, the market becomes well informed quick enough. I think, in my opinion, it takes about 12 to 18 months for that market to start becoming a bit more saturated. So I think moves need to be made quickly to be able to get in to the market in the best possible position. That is to say, taking out a lot of variables. As an example, a property that is worth $750,000 today, once this scheme the more this scheme gets used up, the market value or the value for properties that are 700 to 750,000 today will end up being close to $1 million in 12 to 18 months time, because that's where all the demand lies. Now, next talk, the biggest news in a while that we've heard. I suppose a lot of these are big news, or both of these are big news for us in the property market. Interest rates. So the Reserve Bank has just cut rates by 0.25%, bringing it down to 3.6%. This is news that was very welcomed to a lot of people who are looking to enter the market. And not only that, people who are in the market and were feeling the pinch a little bit, because things have been expensive recently. Groceries or living expenses in general have been very expensive. So it's very welcome news. So what does this mean for borrowers? Banks usually pass these cuts on to their variable mortgage rates. What that means is cheaper or lower monthly repayments. So something like on a $600,000 loan, a 0.25% interest rate cut would probably save you about $100 a month. Another thing which really helps in this market is it increases your borrowing capacity. So someone who maybe a couple of months ago was falling a bit short of certain thresholds or borrowing or a borrowing amount for a particular type of property can increase their borrowing power to be able to purchase what they wanted to. Now, I suppose this is where things become very difficult in the market, is the people who were able to borrow, who were not able to borrow a certain amount a few months ago. They need to make those moves quickly before prices increase significantly again. Now, fixed rates, they generally don't move very quickly, but what you'll start to see is a lot of lenders sort of bringing out good deals. Competition will start increasing among the banks and the lenders. Now, this whole move was aimed at sort of easing the pressure on households and also boosting confidence. So for Brisbane, what that means is, or Brisbane buyers rather, people who are looking to purchase in Brisbane, it pairs really well with the new scheme that is being brought out, especially for first-time owners. Not only is the deposit a hurdle, but it makes the ongoing living expenses a bit easier as well on us all. Just quickly though, not all lenders pass on those rates, so it really pays to make sure and check to see and compare the banks and what interest rates you are getting from your broker or your bank. Now let's talk about a Brisbane market update, or Brisbane and surrounding as well. So I'm going to go through a bit more details in the way of areas, or general areas, councils, and the numbers. So bear with me here. Look out for what you're looking for. Now, in Brisbane, median property prices are sitting at about 935,000. Houses are averaging at just over $1 million, while units are averaging at about $727,000 in Brisbane, with a 10% annual growth. Logan area. The Logan region is showing median house prices of $767,000, with a strong 13.6% increase over the past year. Suburbs like Logan Central, Woodridge, around that area, the median house price is sitting at about $687,000, and the year-on-year growth there has been 14.2%. Unit prices there have grown 32% over the past year, and they're sitting at a median price of about $385,000. Ipswich, median house price has gone up to $740,000, increase of about 10.2% year-on-year. And in Moreton Bay region, the median price is currently sitting at $829,000, with an annual growth of 12.2%. Now, if we go into like some suburb level data there's some areas that have just exploded in the last year. Wirral is at 48% increase, Banksia Beach, Burpengary East, Everton Hills, even Redcliffe. These are seeing increases of 35% year on year. So I mean, we've actually been doing a lot of buying and or building for clients in these areas, and communities are growing. There's a lot that are going into these areas just because of their, I suppose, proximity to Brisbane City and other amenities, beach areas, bay areas. People want to be there. It's just excellent lifestyle living. Fantastic growth in those areas. And then rents are being reflected in those areas similarly as well. Coming back to Brisbane City Council, blue chip areas or conventional blue chip areas, Wavell Heights, Morningside, Holland Park, Kedron, Mount Gravatt. These areas, I think, in the past year have been slept on quite a bit. There has been growth in other areas, unsuspecting areas. I think there's some blue chip areas that there's plenty of good purchasing to be had. We've been talking, we regularly talk to a lot of selling agents. We're in touch with them. I think it's great buying in a lot of blue chip inner city suburbs that there are opportunities to be taken. On the other hand, there's a lot of growth areas, Springfield, Logan, Ipswich, as I mentioned to you before, areas which are have a lot more new developments. So there's new estates, huge master planned estates coming in those areas. People are moving out there and not having to leave those areas a lot of the time, whether it be for work, play, shopping, school, education, self-sufficient areas. Huge growth in those areas. Definitely something to look out in those areas as well. Now, conventionally more affordable suburbs like I suppose Salisbury, Rockley, Coopers Plains. If you come out to Logan, the Woodridge, Logan Central area, Kingston, Slacks Creek, they're starting to get a lot more traction. These areas are areas that I've talked about previously. They are getting a lot more traction. I think prices are still yet to go up simply because of the proximity or geographical location of those areas. I think there's a lot of way to go in those places. Now, just to show you how intense the demand is in Brisbane and surrounding at the moment, recently a rundown, when I say rundown, it was a rundown house in Paddington, sold for just over $3 million. Now, supply is really tight. And that's what I'm trying to tell you, that the buyers are really willing to compete hard in this market right now. Now, how do all these three updates come together for our purchasers or buyers who are looking to purchase in Brisbane? Now, first home buyer scheme, that opens up property up to $1 million with a lower deposit for first home buyers. The cash rate cut means lower interest rates, bit more borrowing power, and ease on living at the moment. A look at a lot of the other bigger markets in Australia, I think it became informed as of maybe a year or so ago. I think now we are actually seeing some sort of growth in the market compared to the other bigger capital cities. From here on forth, there's a lot going for us. We're in demand in the way of where we sit in Brisbane between Sunshine Coast and Gold Coast. We have a lot of job opportunities coming up. Infrastructure is growing. We have the Olympic Games that are coming up. There's investment we're being watched from an international stage at the moment. So I suppose what I'm saying is, a lot of people are just talking about this. Is there going to be a bust? I think maybe inevitably, and it wouldn't be a bust. It definitely won't be a bust. I think there may be a correction. I think that's the proper term for it and the proper way to look at it. There may be a correction, but I don't think it's going to be anytime soon. If anything, I think it's going to be somewhere after 2032, the Olympic Games. But this is simply my opinion. We're trying to meet a demand at the moment. The supply is simply not there. And that's why the Brisbane market has been running so hot. Getting people into houses is our biggest concern. And the inefficiency of those who are supposed to place people or be able to facilitate people into their own houses has just not been there. Therefore, the demand is just simply higher than the supply, which brings us to this market. And currently, we're only meeting 50% of the new housing demand that we actually require. We're not going to cover that anytime soon. So getting into the market sooner at this point in time is far better than having to wait, because in 6 months' time or 12 months' time, you're not going to get a cheaper property or necessarily at any cheaper rate, at a cheaper cash rate. So we need to make those steps now. Whether we're investing or purchasing as an owner-occ, let's make those moves to be able to secure ourselves a property. I suppose my general advice, all in all, in what I'm talking about, use the scheme if it helps you enter the market sooner. Take advantage of the lower interest rates. Definitely don't overstretch your budget, however. And focus on suburbs that, if you're an owner-occupier, works well for you, helps you get into the market, or as an investor, long-term sort of growth potential. That's what matters for you as well. Not necessarily just what you can afford today, but something that will hold value. Guys, I want to know from all of you, if you are planning to buy, are you planning to buy this year, or are you going to wait to see how prices go? Let me know in the comments.